The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 9th day of November. And special day, happy birthday to Tom O'Brien and a member of my family as well. So let's look straight at the market here. We've got Dow down 178 at 23,395. This is going to be very interesting. You see the S&P E-mini right here? It had in the chart wave methodology. Let me just move this across here real quickly. What we look for always is this, in the simplest form, you look for a decline that starts a turnaround from the low bar, the most identifiable low bar. You merely count each successively higher peak. When you get to peak D, the fourth highest peak, other things can happen. It can go to E, F, and even a G, but that's where you're going to make some decisions about positions you have, about whether you're going to add, whether you're going to subtract, whether or not you're going to take a little bit off and put a stop on the remaining position. This is your objective, and that's in the Chapman wave is the most. It's really prime. And sometimes you get a recycle, and then it makes it a little more difficult, but it's still the same methodology. And what we're looking for here is in the E-mini, there was a G/C yesterday with a doji candle that says a close above this candle could be a positive for another day or two. But anytime you go into, this is the candle of the 7th, where it opens at 2587.75 in the December contract. And then it says, at any point in the next day or two, if you break and close underneath that, it is a negative. Well, today we've gone from overnight to a new high to make that leg D, G/C, alternate count, means that you cannot go higher than a G in letters. There's no H. You have to think of a recycle, or you've missed something, and you have to go back and do the count, but we don't have to do anything here because automatically the C becomes a D. D, I just told you, is where other things can happen, and this is what I was pointing out to my subscribers to my opening call. I show this chart every day, the Dow charts, the 120 minutes, the daily, the 120 minutes. Sometimes I've used to every day do an overview and market today, but I found that I really cover almost everything there. So there are certain days where I really want to do that, and certainly on weekends when we've got a lot more time and I start sending my charts out, since I send them out daily throughout the year. So I always show this, which is the daily S&P, whatever month it is, the weekly, and the 120-minute chart. And what I'd shown was, yes, overnight, the E-mini went to 2394.50, leg D. It had already turned down. We're in an E/B in the weekly chart. The MACD, the moving average convergence divergence, is still strong. Stochastic is still very strong. Unbalanced volume was very strong. But in the daily chart, you got a deflection in the MACD, the moving average convergence divergence, which is always negative. And the stochastic was still very strong. It was in the 90s. Now it's in the 88% area. And the unbalanced volume failed to confirm the high, and it's turning down. So 2 out of 3 of these key indicators are already negative. Okay, here we go. Within this context, now let me move. So double top, 2593.50 was the high on the 7th, makes a U-turn to the 2579 area support, comes right back, and then it goes to an F, just squeaks to an F at 2594.50 overnight, and then starts its move down. We're in leg B. We've just pierced the 200-period moving average at about 2571. This is where you should try to find some support, but we've already had an intraday rally because the market was so used to, for not just days, not just weeks, not just months, but almost for a year, every time the markets pull back, even a tad, intraday, there's been a big spike to the upside. However, this is what we're looking at now. Now there's something completely different. I'm going to take my time today in giving this preamble, this analysis, because I think I'd say that this is probably one of the most important weeks we've had in a long time for a whole bunch of reasons. It had to do with the dollar, it had to do with the currencies, it had to do with gold, silver, it had to do with bonds, but most importantly, and this is going to be the key factor, it had to do with the semiconductors, the XLK, that is the S&P tech sector ETF. Those two very important sectors, as well as the QQQ NDX 100, had really led the market up for about 2 years now, but especially over this past year. And until they break to the downside, all of these have to be considered just short-term pullbacks. But we're going to talk about this in great detail. Here we go. The Dow, INDU. The Dow is down 198. Once you have an intraday rally that fails a second time, and we haven't had that yet, we've had one failure, gone to a lower low. Let's see what happens if there's going to be another one. But you can see the MACD is very negative. Stochastic's now down at 87%. And I said to subscribers to my opening call, my daily newsletter, be careful, because it's going to take over 250 points at least, minimum, more like 300 and something, to get the stochastic to go from the 95, 96, 7% area below 80%. 80%, above 80% is positive, below 80% is a negative. Okay. Now what we're looking at is that the weekly chart of the Dow is in F/C. Not going to change that. MACD is good. Stochastics at 97%, excellent. And the relative strength has just turned down a little bit. And the on-balance volume is just dipping a little bit here. So now let's go to the S. So the parameters to look at, I'd been saying 23,250. It's probably a key number, but it's really 23,170. Below that, I think it starts to accelerate lower. And one of the reasons is you've got a low of 23,251. That was the low on the 25th of October. And it never looked back, just kept moving up after that. So that's going to be important. Now let's go to the S&P. Stop next. The S&P right now is trading down 21, but you can't see it from the chart. I wonder why that hasn't updated. Oh, I shouldn't have done that. I hope it's going to be. Yep, there it is. There it is. That's the candle we're looking for. G/C in the S&P, 2597.02 was the high, all-time high 3 days ago. Now we're at 2571 and 25. That's 25 points. That is a serious pullback under the 9-period exponential moving average. The weekly is in F/B. We've just got the sharp pullback in the 120-minute chart. Very strong monthly charts. A leg D in the S&P. Parameters to look for: a close below 2563 would suggest this candle. I forgot to type that in. This is a Chapman Wave Roman candle from 25th of October. Anytime the S&P is trading below 2567 for more than 220-minute bars, there's a good chance it's going to test the low of 25.44, the low of October the 25th. Days young, anything can happen. There are a couple of things I need to talk about, and one of the reasons why I decided to have a webinar, and that webinar is on November the 20th, is for all the things I'm going to be discussing in the next few minutes after this break. Dow's down 228, S&P is down 24, and it's one of the reasons why we went quite short today, adding to one of our short positions.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So remember, now we've got the reason why I was looking for a coincidence of political, let's say, questionable political activity here, as well as tying it together with the S&P with a doji candle 3 days ago, probably going to test the 9-period moving average. It's now down below it. I didn't know that at the time. Together, now let's look at the QQQ, because the QQQs, well, I'm not sure why these did not update. I'll do that. It'll take a second. Power shares, QQQ series, trading right now at 152.58. This is going to be an F/B. Good chance that it's an F, but the MACD and stochastic are extremely strong still. Therefore, I didn't want to get too carried away. I wanted, in fact, a rally off the lows of the day before we went short a couple of positions. And one of those positions has been an absolute leader all the way through for years, but at least for the last year, it's been exceptional. What can I say? This is the best you do. So on the left here is the daily, weekly, monthly, and the 120-minute chart, which if I'm correct in saying it's A, B, C, just made a peak, D, up, nope. Right there. A, B, there we go. C, D, made a peak, E in the 120-minute chart, pulling back sharply under the 9-period moving average. But we've seen buying come in before. So if there's any political news in terms of the taxes, that's why I mean political, that stimulates the market to go higher, it's vulnerable to another big spike to the upside. I don't think it's going to happen here. I think there are, as I see it, there are just enough potential dark clouds over this market to have about a 2-week pullback, a 5 to 7 session at least pullback if we close very negatively today. And I want different sectors to be closing. I want the the Qs by, today's Thursday, by tomorrow or Monday at the latest. The Qs have to be below. They don't have to. I would like them to. They're at 152.60. That's the Power Shares Trust Series NDX 100 trading vehicle. I'd like to see it under 152.25. That's not far to go. It's at 152.58. that'll say to me, okay, a little more confidence that you could have a rally and then a lower low. But I didn't want to short the Qs for a couple of reasons. The most important being the MACD and stochastic was still very strong, so that it could chop for a little while longer before it breaks down. However, now I'm going to go through some other things. If you look at the IWM is having a, is that today? Nope. None of these have, very unusual, none of these updated. All right, updating now. So it had a spike and now it's down a little bit lower. We actually tried to short the IWM through one of the other vehicles, the inverse vehicle yesterday, just missed it. But we've got something, we've got others, so that's, I can't complain. Most importantly, the IWM and the New York Stock Exchange were leading the market down. And I don't like to see a divergence like that. Why? Well, the IWM is Russell 2000, small cap stocks. Sometimes they go under the radar, but under the radar and under the 9-period moving average, I don't like that. So that's it to me. Be somewhat careful of the divergence with the Dow, the S&P, the QQQs, all making new all-time highs, SMHs as well, semiconductors. But now look at the New York Stock Exchange, which is giving that diversion way over 2,000 stocks. This is a sign to say, hey, watch out, because at 12,287, if it closes, and I mentioned this before, I spoke about, I think yesterday or the day before, I said the Chapman Wave Roman candle of the 25th of October says at any point, if there is a trading for 2 hours below 12,300, be careful, because we're liable to test the low of 12,280. Well, today we've gone down to 12,280. We've double bottomed so far. So this is going to be very important close today. There are a lot of news events that could still happen over the day to give a little spring to the upside, as we've seen so often. But this is saying it's going to have to be fantastic news to really get the New York Stock Exchange at 12,285 to push above 12,354, the 9-period moving average. Now let's look at the gold. So this is very interesting. Gold is up $3 right now. I might be a little behind in time, but let me just look at the GLD would be current, and that is trading at, is that updating now? Let me just double check. There you are. So gold, GLD is up 50 cents. Okay, so gold right now is up. Now this is a very interesting thing. I didn't expect to do it, but we are long the dollar from the low of the 8th of September, have a partial position, and we started a small position in a gold ETF. Now that's really interesting because the two shouldn't go together. But the reason I did it is that this is a cluster formation. All these bars making a U-shaped pattern at the bottom, a cup formation, suggests that the low of 1265, if there was a move today of -7 or -8 on gold, I would have had to say, you know what, this is a cluster formation, therefore we should be testing further the 1280 level, the 9-period moving average, and 1275, the 200-period moving average. But the way it closed yesterday, the way it held earlier this morning, I said to subscribers, we're going to go along a small position. I think it's just a 3 to 5 day or maybe a 5 to 7 day type trade. I just don't know yet. I want to be there. I don't want to grab this when it's higher, because that's where the risk is greater. So we're in a position, one of the positions of one of these particular gold issues. And the reason is, when I looked at the dollar, it was incredible. In the Chapman Wave methodology, there's a technique that we've discussed. We've done it for years here. I had done it for a long time, and then it became highly visible when Peter used to call in about currencies, and we made this peak C1, C2 double top in the euro, and then it kept trying to go higher, and those became very important. So I discussed yesterday at 95.15, the dollar index on the 27th was peak C1, and that there was a chance. We had just made a peak C2 at what? 95.15. You needed 1 penny for that missing leg D. This is what's called a Chapman Wave double top. and it is a peak C1, C2. It's like there's a phantom peak D there, because everything about the technical said, hey, this is a good chance that we might have a little bit of a pullback. The weekly is still very strong. That's the reason why I think this is how can I call it a shorter term? I don't know the time. I'm just thinking it is like a 2-week hiatus. It might be short, it might be 3 days, it might be less. I don't know what it'll be. But I think that the dollar is going to hold very well, and that the euro is going to be pulling back even further. So a nice strong candle on the euro, but the weekly chart says, we're not quite done. We might have to do more testing of the 1.15s. That's what I discussed yesterday. And it's at 1.164. It's up 0.004. And if you look at the USD JPY, the yen is pulling back sharply after that peak G/C, probably going to turn into a peak G at this particular point. The Dow's down 211, S&P's down 27. I haven't spoken about my upcoming webinar. I will, as soon as we get back, be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone, we're back. So let's just do a couple of things here. So that's the USD JPY. I also wanted to show something that I think is quite interesting here. Silver had, gosh, I can't believe these things. They always update. I'm not sure why it's not. Anyways, not updating. So silver at this time can't be down. Surely silver's not down. Down 1 point. Is that today? The 9th? Yep, it is. Silver is down 1 point. It's down 0.16. Let me just double check. Is gold? Yeah, gold is up 3. Not sure what's going on. That's just, I don't understand that. Anyway, so I wanted to show you crude oil. So crude oil has done everything that we wanted from looking at the chart. And the reason why I say everything we wanted is that we have the DBC, which is the Deutsche Bank Commodity Tracking Fund. We're down in the 1480s. Let me just double up, 1482 level. And it's trading now at 16.40, having hit 1655, made a peak D, sort of settling in here. One of the reasons why I wanted to try to keep this as long as possible, it did everything we wanted. The left side, right side price time match in a shorter period of time, going to a leg E above the 16.08, January the 20th, week of January the 20th, peak D. Pulls all the way back to a trough D, and then it goes back up again. It's done everything. But this whole thing with the Saudis, I have to think that this is a lot more serious than people think. You don't just take your cousins, etc., lock them up and put them into jail, even if that jail happens to be the Ritz, and start reading about money flight from Saudi Arabia. There's something going on here, and I think it'll at least hold crude oil quite well for the shorter term, and then we'll see what happens. But in the meantime, this is my thinking to try to hold it a little bit longer. One of the aspects that I'm looking at very closely is the bank. We do have Bank of America. We might be stopped out soon. We've had it from the 23.40 area. We did take nice profits at about 25.87, then let it go higher, went to 27.98 peak E. Now I can put a down arrow. And I just thought, my contention has been that yields will fall, bonds will rally if there's going to be a more sustained move to the downside. The volatility index, which is now at 1204, up 2.29, would get into the teens and hold. And that the only way you can get a bear phase is if you have double-digit down in the future S&P futures and triple-digit down in the Dow futures, and then every rally fails and it closes towards the low of the day. That's, to me, that's the bear phase. So this, to come off the top and then to go straight into a bear phase, something's a little suspicious about that. So all you can do is be very selective, and that's the way I'm looking at it now. So the TLT is trading at this point at 126, down 36. Let me double check. Yeah. So that says that money's not the flight that I expected to go from the risk of equities into the so-called safety of fixed income, like bonds. It happened, and today would be the day where it should have shot up about a point, and it's down 33 cents. So this market could yet again defy us in its proclivity to have different metrics all the time. So the metrics you look at, other than my Chapman wave notation, they just keep changing. But look at the 92% in the stochastic, and the MACD is still strong. And that says to me that yields should go higher, and we'll be watching that very closely. So now I wanted to go to did that. I've done everything that I needed to do in that area. Okay, I thought I'd have a look at the Nikkei, which is doing the futures. Nikkei today made a leg F, and now it's pulling back sharply. This is the exact thing that you look for at a peak F Chapman wave, the 6th highest peak. If it's going to be a serious peak F, it's no good to have one day like this, because this is so far an inverted Chapman wave Roman candle. And at any point, if there is a rally to 23,190s in the futures, it's going to test the high of today. But if it closes down here, any rally fails and it makes the H pattern within by Monday or Tuesday, the Nikkei 225 continuous contract trading at 22,415 down 545. If it breaks to 22,270, I think we've seen more than a short-term top. It could affect the leg D in the weekly. But let's just go one step at a time. Those are the parameters to be looking for. Then I had a question about, well, where did the questions go? So this is a statement. 2650 to hold as support through 1215, 26,000 put as, okay, so this is the E-minis. All right, I can only go one thing at a time. I don't want to jump into speculating about January. Let's just get through November before we can even think of December. So let me just do this. This is just the first serious, look, here's the Dow again, INDU. This is just the first big red candle. It's the biggest we've had in a long time. But the last red candle was looking really ugly. That was on the 25th of October. Next thing you know, on the 25th, next thing you know, you start to get higher highs and higher lows. So all I can say is I have to just have patience. We've got our positions, and we'll see what happens. Oh, we've got a caller. I didn't see the caller. Don't forget. We've got, who do I have? Max. Hi, Max.
Hi. Good afternoon, Basil.
Yes.
Why
This is
am I a
Max.
little confused about the trend?
Oh, the trend?
Doesn't seem to sync with the market.
Okay, let me just go there. Give me 1 second. I'm going to go to the trend. This is the chart that I usually show. So let me just see if I'm updating here. Is this the 9th? No, that's the 8th. Why on earth? I've never seen this before. Okay, there it is. So the trend is down at 0.56, down 40. Is that what you get, down?
I'm down 6.65.
Okay, so let me just explain a couple of things. Within the context of the markets, something that I look at judiciously every single day is the action of what Richard Arms developed. It's called the short-term trading index. I call it, for my purpose, the Chapman Wave Trend Index. It's his index, but I use numbers, and those numbers have special meaning for me. When they're very high, it means within 2 days you're going to get a pretty good chance of a 9 to 11 point rally in the E-mini, S&P E-mini, which should impact positively the cash indices before there's a pullback. And if it's very low, you immediately, the very next morning, the Dow should go negative. So now what we're looking at is that I've got it at 0.58. I'm kind of sticking with mine. I don't know what your low is today, but this is pretty much the low of the day. 0.54 is the low so far. So because it's made up,
0.63 is the low.
okay, so because it's made up of intraday highs and lows subtracted from gainers and losers and winners, I'm looking at this and I'm saying, okay, just treat it as your index and don't get too carried away. And I'll tell you why. I've seen on occasion where the trend ignores the market. It is the strangest thing. Today is another day. You would, if I said to you, Max, where do you think the trend is? And you closed your eyes, you would have, and I said to you, the Dow's down 211, the S&P's down 23. Where do you think? You would have said probably about 1.98, 2.10,
Yes,
right?
I'd say about 2, yes.
Yeah, okay. So let's get back and we'll talk about it as soon as I return.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Larry Pezzavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're on with Max, and we're looking at, we're talking about the ARMS index, and this is the trend. So the question is, what is the ARMS index or the trend? The ARMS index is a technical analysis indicator that compares advancing and declining stock issues and trading volume as an indicator of overall market sentiment. It measures the relationship between market supply and demand and is used as a predictor of future price movements in the market, primarily on an intraday basis. I don't find that, I mean, I just don't, for my own purpose, I do not find that useful. I like the numbers, and what happens every once in a while at the start of a move, I actually like to see that at the start of a move, the VIX index and the TRIN index kind of ignores it and then catches up because it gives you lots of time. In this case, the VIX is actually up 21%, so that's different. Both Max and I would have, under normal conditions, a move of 200 points, which we hardly see, it shows total disbelief in the TRIN about this particular move. That's what I call, it's as if the TRIN was out on vacation today, just didn't see it. But when it gets back tomorrow, it'll start to move. But all I can say is I'm with you. It's a very complex thing. It should be a simple arithmetic kind of formula. I've found that over the years it misses so many times that the only way I use it is to use my particular numbers. And right now I don't have any number at all to say, to give me a sense of what will happen tomorrow based on the trend. I have it on other things. So Max, I'm with you. I just, it doesn't make sense, but I will say to you that I would not be surprised if the trend is actually telling us that internally there are a lot of people that still think buying is the norm and not selling. That's, to me, that's the only interpretation I can have right at this moment.
Okay, thank you.
So I'm sorry I couldn't help you, but that's my best interpretation. I bet tomorrow you'll see the VIX perk up. If the market closes down, down more than 150, S&P more than, say, 18, then you'll see that VIX perk up real quickly tomorrow. Thanks for calling in. A good question. I'm just sorry I can't give you the answer for right now, other than to say I think it's because there's actually internal buying. A lot of fund managers still don't want to miss out. So thank you so much for calling.
Thank you.
Thank you. So, folks, a couple of things I want you to do here. Let me just do this right now. Let me go to the front page of TFNN right here. Now, of course, Larry's giving, there's a workshop coming up on Monday, a webinar with Larry Pesavento. And let me just get this. Why is it not showing? A little bit blank there. Hello. Oh, there it is. The opening call subscriber event for November the 20th. What can we anticipate for 2018? It's not, that is really not the only question. I have just a whole series of questions. I'll tell you now what I'm going to be covering. This is for subscribers. So if you want to be participating in the webinar, and if you want to be participating in my newsletter, you can get it for free for a month if you sign up for the webinar. This is a perfect time because this is an deflection point in the market. I told you this week I thought would be a really important week. I think it is. So I'll be discussing what can we anticipate for 2018. Can high techs continue to lead? Will the financials be impacted by yields, and where will yields be in 2018? The chances for inflation or deflation, I think that's going to be a really important question. The dollar and gold's longer-term outlook, autos, real estate, and socioeconomic political nuances in the next phase. Of this whole CODA phase, worldwide stock market euphoric phase. If you look at all the markets, they've been screaming to the upside. Will that continue? Will we see a worldwide stock market, something that puts the year 2000, makes it like a walk in the park? Whew, imagine if that happens. Possibility of a serious consolidation before that happens. My inclination is to think before we have the next big move on the upside, we can have a pretty serious pullback, and certainly serious in some of the sectors. And then we'll see if there's a rotational correction involved. Politically, the chances for a third party are increasing. Stocks that could benefit or weaken. So it's going to be just a really comprehensive 90 minutes. And so that's what I'm looking at. And don't forget, Larry President also has and John Jameson on the 15th. So mine is on the 20th, Monday the 20th, 5 o'clock till 6:30 Eastern time. So now let's go to the market. So what we want to look at is, so look, you see this is the Chapman wave methodology. In this case, I've shown that there were two Chapman wave 5s. This is not like Elliott wave, but it has 5 as the consequence. The conclusion. So there was a Chapman wave 5 in the 120-minute chart. It went to a peak G, and that peak G was at 23,602 just a couple of days ago. And then there was a pullback. And what I drew in for my subscribers to my opening call, I said, look at this arch formation. There's a good chance that if we go down 40 or more points by 11:10 this morning, that's Eastern time, we will be testing the left side low of 23,484. If we take that out, that's really not very good action. And here we are. We're now in leg 3 to the downside. Should have a 4 and then maybe a 5. Here's the 120-minute. Look at the MACD and stochastic. They were failing yesterday. Here's the daily chart. And this is what I show subscribers every single day. So what I do want to show you is, within the context of the markets, what I had said is the SMHs, the semiconductor index, led on the way up and on the way down. And that because there was a peak F potential at 104.40, no, it's 144, 40, that was yesterday. Any pullback, especially with NVIDIA coming out after the bell, and boy, it's been, look at NVIDIA. It's just been a monster to the upside. What it was until yesterday and today. So a monster to the upside, going from the 20s just a couple of years ago into the 200 and almost 220 area, actually 212. And now look what happens. It makes a high of 212.90 on the 7th, and now it's trading at 201. This is the deepest correction it's had, I think, ever. Certainly, no, not ever. In the shortest period of time, yes. But the last one was at 191 down to 170. All right, 21 points. So that was so that's about a 12% correction. So okay, so what we're looking at here is what happens today after the bell. My thinking here is that NVIDIA is actually in having a problem. I think that even if the earnings come out, they have to be spectacular to break into the 214s. I think there's a greater chance that even if there's a rally within another 3-4 days, the 198, 196s could be tested. Hey, I could be totally wrong. And that's going to also help impact the SMHs up or down. So the SMH right now, the daily, is in fact down 290 at 101.40. We actually went short of the opening via one of the instruments. And it's in a leg D/C with fabulous technicals in the weekly chart. So it has to be the peak E that was made in the 120-minute chart that leads the leg F to a peak F in the daily. And that has to, until 96 is hit, so that the weekly finally goes to a sell signal. This is just a breather. We'll see what happens with the SMHs. I think actually that they're making some kind of a fairly important top, at least short term. Basil Chapman, Target Conditions Hour. We'll be right back. Oh, we got a Tom and Plymouth as soon as I get back. Tom, hold on. We'll be there. We'll talk about the VIX.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
All right, so a couple of things going on during the day, during the break. Mentioned there was about the tulip bubble. Well, it turns out that back in the 1630s in Holland, the very rare black tulip was sold for the price of a farm, and to some orphans sold it. The legal guardian. Eventually, that just like Bernie, where everything was Madoff, the whole thing was turned around. So in this case, the orphans got their money back way after the crash, huge crash, because the judge ruled that it was the executor that they did not deserve, they should not have sold the farm, and they got all their money back, and whoever bought the tulip didn't. Well, let's go back. Let's go to Tom in Plymouth. Tom, how are you?
Hey, good afternoon, Basil. How are you?
I'm well, thank you.
That's good. Hey, well, I'm in the TVIX. I got in the other day at 826. And
very nice.
got quite
Good.
a little pop here today. And usually Steve Rhodes usually says when that VIX jumps over 10%, it's time to go for the day. So I'm wondering what your thoughts are on it.
Boy, this is the one time. Okay, do you have enough in the VIX to take at least a good, decent profit and maybe keep some?
Oh, absolutely. That's what I was thinking about doing, is maybe selling a third or a half.
You know what I would do? I'd sell 1/3 as we're speaking right now at $11.75. I'd have a stop on another third at about $11.20. And if that isn't taken out by day's end, of course, overnight with tax and all that, anything can happen. NVIDIA, a whole bunch of things can happen. If a market closes near the high of the day, even after you've taken off a little bit, and I would say to you, take off another little bit, because if it screams to the VIX screams to the upside tomorrow, you've still got enough to say, wow, that was a wonderful trade. But if it suddenly turns down, all of a sudden you're looking at the VIX at $10.60 this time tomorrow, that's a big give back. So take something off now. Maybe if it closed towards the high of the day, you could take a little bit off. But in the meantime, I would then have about an $11.20 stop on the day. Let's talk about it tomorrow. Hey, congratulations. Great move. Thanks for being here, folks.
Have a great afternoon.
Thank you. I'll be back later on at 3 o'clock to 5 o'clock. I'll be doing Tom O'Brien's hour, 2 hours. So call me later on and have a great day. Otherwise, I'll see you later on.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.